All right, we know that internal to external is like this. We want to see price come back in here and then go back down, basically. But we want to see this in the higher time frame. So this can be the hourly. If you want to trade the 5-minute, the daily, if you want to trade it hourly. This can be the weekly if you want to trade a 4-hour structure. But how do we actually use this to benefit from it? So if we have a fair value gap right here. Okay. And we know the price should, where is this? Price should pull in here. After filling up the gap, it should come back down. Okay. Now I'm gonna explain to you how you can use this on the lower time frame. Okay. So I'm gonna say that this here is the hourly chart, okay? And we've been trending down for some time. And the first thing we can do is we can try to catch the move up to the fair value gap, actually. So let me actually draw this fair value gap back up again. All right, there we go. Now I'm gonna just wait. All right, now I'm gonna show you the stages of it. Okay. So the next candle open. By all means, it should technically come back up here. It might do it in one candle or 2 candles. It really depends. Okay. And then after it taps into the fair value gap, I'm just doing the basics right now for people that don't know about internal to external. Um, and then afterwards, we expect it to come down again with another black candle. So it's a very simple concept. This is what majority of traders trade online. And if you look closely in this fair value gap as well, what do you see? You see a turtle soup right there on this high as well. That's something that can also be traded. So now I'm going to demonstrate how we can capitalize on the way up to the fair value gap and then on the way down. So I'm going to start with on the way up. Let me just fuck. All right. Okay, when this candle opens down here, preferably on one of the pairs, we would like to see a lower time frame SMT. Okay. Because this lower time frame SMT is going to drag price back up here, and then it's going to tap into the fair value gap. So you want to see an SMT between this low and this low right here, SMT. And then that will pull this one in at least 50% of this candle. And then it should come up to the fair value gap eventually. So this also works. This is like the CRT model that I taught. You just need a fair value gap here. One of them will sweep the low, the other one will refuse to. They both have to have a fair value gap in most occasions. And then you can see that it already pull up to 50% with ease, and then it will come up here. I saw some screenshots of some people that watched the free YouTube video, and they found it very beneficial. And they were showing me screenshots of it working, which is good. So how would this here look? right? Because SMT is everything. You gotta remember that. SMT jumpstarts every single reversal. Alright. So now if we take this, that same low, it's gonna be swept. Body should be a little bit lower. Alright. It's a clear SMT right here. And then on the lower time frame, I'm still talking about this candle formation here. It should look something like this. Where did I? Okay, here. Here we're gonna have this failure swing. Then it's gonna refuse to go below the low, and then it's gonna break structure. Right here, there's gonna be a market structure shift. Then you can wait for your OTE or FAG entry or balance price range from this, and then you can take it to the fair value gap, which should reside around here. This one right there, and then you can take it to the fair value gap. It should do it with ease, and if you do it right, is it visible? All right, so right here, because there's an SMT on this low right here is going to be very protective. So when you catch this, your stop loss here will be very protective. Will be very protected. So yeah, I mean, that's how strong SMTs are. Where's the? And then let's say there's a fair value gap here. I can't explain to you how strong this would be if there was. If there's a fair value gap here or a balanced price range, this is unbelievably strong. And it will reach up eventually. With the new candle open, it should sweep it. Just like so. Boom. It's gonna create that little lower wick. And then it's gonna come up here. Okay, so this is what this chart right here with the failure swing would look like. So we're gonna just call this FS right there. And now if you look here, if you watch my previous video, then you can see that this is a turtle soup and a CRT. So this candle becomes the CRT. Okay, so I'll explain to you right now what this here would look like. So we would have price coming down. And then making a lower low. And this is where the SMT forms. And after that, we should see an explosive move up. Just like so. I could tell you so much about this here and what you want to see, but alright, I'll give you this one. You want to see this order block here, this low, support price is higher. I'll give you that one. I'll be nice. Yep. So that's the one thing. And then let's say, okay, so it has a fair value gap. The fair value gap would be all the way up here. So you see sometimes the total soup entry, if it reaches the fair value gap, it will provide more pips and more risk to reward, just like so. But this low right here is not as secure because it's because this is this pair right here. So let's say this is yes, and then let's say this is NQ. Okay, so because ES does take this low right here, which is where the SMT forms. I'm gonna take this just oh, wait. This low right here is not really protected. It could get swept one last time before moving higher. So I do want to make everybody aware of that when they start trading this. But there's a way of fixing this. You can just extend your stop loss a little bit, just like this. Just a little bit below the low. Not like too much like this. Just a little bit below the low. Because if it does sweep it one more time, then it should just rally right afterwards. Yeah, I'm giving stuff too much information to these people. Okay. So that's the example. Now I'm gonna give you guys the time alignments for this because how should I do this? Um, these are my favorite ones, by the way. But if you don't have time to sit in front of the charts, then we would use the 1 hour. It's crucial to understand these time alignments. When you're beginning trading, you should always use the time frame alignments because they'll just offer more probability. Also, you gotta remember to take partials during this entire move up because you're going against the trend because it's going down. So even when it reaches 50% here, you want to be taking partial, just like Romeo says on Twitter. Yeah, I mean, you can really keep this going, but this is already too extreme, in my opinion. And yeah, I mean, the same thing should happen here. Yeah, so I can give you guys one thing to look out for when this happens as well. So there's the SMT in here that some people don't talk about. So I'll give you a different kind for this scenario, okay? And this way you know that it's gonna reach the fair value gap also. Some too nice. We'll delete these. Alright, what we're gonna do is they're both gonna sweep the low. Alright, so what do you see here? in reality. Um, Danny, could you just let me know what they're saying? Because I don't want to have out. Have they given a reply to what they're saying? Because it's literally just right in front of them. Alright, this is what it looks like. Also, this right here, this candle might even push past the fair value gap and come up here. In this particular case. So this one would offer so much more pips, but they both swept it, as you can see. They both swept the low. And the reason why this happens is we can see that there's a hidden SMT here with the candle closures. This candle here rejected from this low. Even if this candle here end up being a down close, just like so. If it end up being a down close like a doji, like this, but still not below the low, and this one closes below the low, we can for sure expect this to come up fast. Here, look. And then boom, and then even here we might see an SMT sometimes where this weaker one on US might sweep the low. And then it causes it, um it causes NQ to have a very explosive move from down here, from this wick. So if you get the entry right, you can technically easy free R. This right there. I hope you guys are seeing it. And once again, the same time frame alignments for this. So this is the basic market maker model structure strategy you want to do when you're starting off. You want to focus on this, and also make sure that whatever time frame you're doing this, you're also doing it with the correct true opens aligned. So when you're buying down here, you're below the true opens. You have all the revolving true opens coming with you. Okay? It's very important you do that. You don't want to be buying in premium. Because if we're in premium, the true open is down here. And we're trying to buy up here, this is most likely going to fail. You know? Or the setup is going to be very low probability. Danny, do I have any questions? Oh, wow, that's a very good question. But you see, okay, what you might see sometimes is, okay, I shouldn't be saying this, but there could be an SMT in here as well. So let's say they both reach the fair value gap, yeah. Look, I'm gonna make it so obvious, but I'm not gonna say it. Um, Oh wait, I can just. Oops. I'm not gonna tell you, but if you see it, you see it. I've already said it enough. And then with the next candle, we can either expect a dodo soup within the gap right up here. Boom, comes down. Remember, this is what CRT is all about. Like, don't get it confused. It's kind of annoying. Look, dodo soup within the range, right there. 50%, easy. Always 50%, guaranteed. 99% that 50% is gonna get hit. And then you can take it to the low. You might take it in this candle or the next candle. That's not gonna answer his question. He's not gonna be satisfied, but if he looks deep enough in this, he might see something. That's all I'm gonna say. And sometimes you can see an SMT between this high and this high, where um one of these might overshoot a little, and that's just good for us because this gives us a better opportunity to sell. Even at the total soup here, if it does wick up, we can sell here, stop loss here, and then down. And because this is aligned with the higher time frame, if we catch this move on the way down, dude, you can hold this. You don't need to target the low. You can hold something deeper and further away. Is there any other questions? Wow, these are very good questions. Okay, so you remember when I drew the structure? I hope you do. Look, I can draw it again. This is a different scenario, but I'll just draw it again, okay? No, I deleted it. Um, all right, so I know exactly what he's talking about. All right, the true open should be around here for the SMT candle. And then the SMT forms right here. And the SMT needs to be a sequential SMT. I didn't say it, but I feel like you guys should know that by now, that there should be a sequential SMT here. Right there. So this has to be Q2, Q3, or Q3 into Q4. Because remember, Q4 is not going to reverse unless there's an SMT and a market structure shift break, just like here. So the true open will be here. Because look, the candle opens, wicks lower, creates the SMT below true open of the candle. And the true daily open is around here, let's say. So it really lines up because let's say this is the boom, boom. And obviously you can have the true weekly open as well, aligning with your narrative and bias. Yes. What about it? Oh yeah, this one? Yeah, that's what it was. Yep, that would be a hidden SMT. Even if it does sweep it here, we can look for a lower time frame SMT because it will spring up with this hidden SMT, at least to the 50% from here to here, which is another way you can take a partial, by the way. This is what happened to my. And you know what this is, guys? A real breaker right here with an SMT. What the SMT makes this a real breaker, and then it will come up. Is there any more questions? Sorry, should I keep going or is this too much, do you think, for the people? This one? Alright, here, I'll explain. I'll, I'll say this, right? Even every retracement, like let's say, um, I'll do this. Look, see, every retracement here, let's count the retracements, yeah? Actually, this is retracement one. Oh, you're slowly starting to see how there's an opportunity like everywhere with this. And then this wouldn't be a retracement because it's a market shift break. But this here would be because the retrace is lower. And it usually it goes into OTE, or if it's too strong, it's not even gonna bother. It doesn't need to go into OTE though. So every retracement is a market maker model. So here there might be a fair value gap. Here there might not be a fair value gap, but it still needs to retrace to OTE and premium to come down again. Every retracement gives you a market maker model on the way up and then on the way down as well. So even when you're trading this candle on the lower, like the lower time frame, let's say there's a fair value gap here. If price comes down to pull up into the fair value gap, it comes up to hit the target that we were looking at, which is this. Dude, this is a market maker model in itself on the on the extreme lower time frame. So let's say this is let's say this structure here, this is the 4 hour, okay? And we're trading the 15-minute, okay? This is the 15-minute structure. And we're going towards a 1 hour, a 4 hour fair value gap, okay? So I'm gonna draw the fair value gap here because it's confusing. For sure. I'll show you how crazy this can actually get. Gonna look a bit bigger because it's in the lower time frame. All right, we have the PDR right here, right? And this is the 15-minute because we're aligning the 15-minute with the 4-hour. So if it's a 4-hour fair value gap, we use the 15-minute structure, okay? But however, right, we can trade 1 minute. So there's a 15-minute PDR right here. So we can trade the 1-minute market maker sell model on the way down. And then here we can trade the 1-minute market maker buy model on the way up as well. So technically, let's zoom in into this now, okay? And I'll show you what it would look like and how crazy you can actually go because it's just all fractal. But you got to be careful because I'll explain something about this. So yeah, we're gonna talk about this move down and this move up now, okay? All right. I'm just gonna add labels to this. Remember, we have this PDR right there. All right. So if you become really good at this, this is something I do, you can get the lower time frame entry towards a high time frame target. And of course, if there's no SMT here, guys, there is no trade right there in the PDR, right? So we're zoomed in on this angle right there. And this is it. On the way up, it gives you a market maker sell model. On the way up, it gives you market maker buy model. So, and because this is fractal, it would also be below discount as well, this buy right here. But if it's not, then don't buy it because this is what I was saying. What could happen is it could sweep it one more time. But obviously this is why you look for an SMT because it doesn't do that. And then you take a partial, obviously. On the way up, you take partials. It's pretty stupid if you don't take partials. So that's one example I can give because it's fractal, so you can technically catch this entire move. Because you know the 15-minute is bullish. You have a 15-minute bullish PDRA supporting your idea. Now all you need is a lower time frame SMT, and you want to see that the lower time frame is it's now disrespecting the bearish PDRAs. So I could say something very strong here, but all I'm gonna say is this. You can wait for the market structure shift, or there's another thing you can wait for. But yeah, don't want to give too much away. Danny, you were gonna say something? Yeah, because if I keep going, then I'll just leak all the good stuff. Yeah, yeah, of course, of course. It's not more time based. It's more premium and discount based. I would say the true opens. I'm not gonna say that, but I've seen crazy stuff with the true opens, okay? So if you have the true open right here aligning with the breaker, it's gonna be very good. Especially if the true breaker aligns with new week opening up, it's gonna be also really good. But that's all I'm gonna say.